Hello, everybody, and welcome to our market update for the 15th of March, 2026. Glad to have you with us. I hope you're all having a terrific weekend. Before I get into the session today, important announcement. Tomorrow's market chat will be at 10 a.m. Eastern Time. I've got some commitments that I need to attend to, including a dentist appointment tomorrow afternoon. So the market chat tomorrow will be at 10 a.m. Eastern. I'll send you the join link shortly. Let's start where we always do with the NASDAQ. I've been saying this for about 3 Sundays now that I think we hit this level on the bottom of this ribbon here at 586 and change. And before we get to the all-time highs, and it looks like that thesis is playing out, we now can see the lower highs. The lows, you can see we're finding a bit of support here at that 590 level. But I think this week, as we get into options expiry week on Friday, I think something is going to happen next week, and I suspect that we will be likely testing the lows here near the ribbon before we go back up to these all-time highs. Not all that surprising. We've been watching this carefully over the last 3 or 4 weeks or so. And we've been seeing that every time we try to overcome a previous pivot high, we have a lot of difficulty. And in this case, my thoughts are that once we get below here, I may start considering new shorts. Now, one of my rules that I have is that I need to break a previous pivot low below the ribbon to take any new shorts. That doesn't look like that would happen until somewhere in this area here, and that would be too far gone. So I want to see where we go with the indices, and I was pointing this out on Friday as well. Just because the indices are sort of pinned in the area or moving down slowly, it doesn't mean that we don't have other individual names on which we can consider shorts as well. And that is what I'm doing, and I'll talk about some of those today. On the SPY, you can see on Sunday, last Sunday, we were at that 150-day simple moving average area. We did hold above, and then that Thursday action, and then certainly the Friday action. That's an ugly close. On Friday, heading towards the bottom of the ribbon. No surprise here. Lower highs, lower lows across the board there. So I'd be looking for more shorts. IWM still holding a little bit of support here at that 150-day. Excuse me, am I more optimistic about this? No, I'm not. I think if the two bigger indices, the S&P and the NASDAQ roll over, I think the Russell isn't far behind. The Dow also breaking through that 150-day simple moving average, the Weinstein indicator, although the volume delta here is interesting to me on Friday because we did have a bit of a down day, 0.23% to the downside, but it looks like there were more net buyers than sellers here on the volume delta. So this one is a little bit more interesting, and you can see we actually did breach the bottom of the ribbon and have a close below. So if things continue this way, we actually might have a new valid short on this, on DIA on Monday. We already have a new valid low. The label hasn't come in yet. It will actually paint on Monday morning when the market's open. And if I take you to the screener, you can see the screener is actually just a little ahead in terms of timing or in terms of the label painting on the charts. And you can see that TQQQ has already flashed a main short signal, and this is troubling here, as have Goldman Sachs and Morgan Stanley, the two big financials. So when the financials break down, I'm sorry, there's TQQQ. Let's look at Goldman. There's Goldman there, and this will be a new short entry on Monday when the markets open. And Morgan Stanley, very, very similar look here, I suspect. And yes, so there's the hard stop. There's the new short entry on the Friday bar. The fact that the financials are rolling over presents a little bit of concern to me. And we've all talked about, or we've all discussed the issue of redemptions being problematic at some of the big private equity firms, is it Blackstone, BlackRock, Blackstone, as well as Blue Owl Capital, and some of the other private equity firms. That's never a good sign. So the fact that the financials have rolled over, the indices are not far behind. My bias in this market is to the downside. Now, I haven't said that in quite some time, and it feels strange to say that because the markets generally do go up. But I think we may be in for a bit of a haircut here, especially after we get past the options expiry on Friday. We do also have a Fed announcement, which should be of little consequence. If I go over to Polymarket, you can see the chances of a rate cut in the March meeting, less than 1%. So this is a foregone conclusion that we're not going to have a rate cut here. However, if I look to see what the odds are, pardon me, of a rate cut in April, June, July, etc. So uh, Mr. Warsh should be taking over and should be presiding over this June meeting here. And you can see the odds jump from 7 to 32%. But the the trade that I like here the most is a cut before a cut by the December meeting. And there's a 78% chance of that happening. And this is really a bet on whether we're going to have a Fed cut at some point this year. And I think the odds of that are quite high, especially when we've got a market that's looks like it's going to be rolling over. We've got a new Fed chairman coming in who likely is interested or going to be following the lead of the administration, of the White House administration that wants rate cuts. I think this is an I think this is a fair wager here at 78% to say that there will be at least one rate cut between now and basically the end of the year. So keep an eye on that, or I'm keeping an eye on that. Let's go back to our screener here on yield, the velocity system. What else do we have that looks interesting? Riot is basically a Bitcoin proxy. We don't need to look at that. Block is a messy, messy chart. Airbnb, same thing, messy, messy chart. So we'll move past those. Is there anything on a short re-entry? I've got a couple. So FNGS and AGQ. Let's put the leverage stuff aside for a minute. FNGS. So there's the re-entry short. So interesting. So this one, we look like we got our first short here. And if we were to follow that same rule, we want to see a break below a significant or clearly defined pivot high. It would be way back here somewhere. But what happens in this case when on the initial move down, we don't break it, is that we establish a new clearly defined pivot low. If I draw that across, now when I get this trade here, this becomes a valid short to me. So 63.82 approximately. I put my stop loss here at 67.84, or even at the top of the ribbon. In this case, they both are around the same area, so nothing significant. We're below the 150-day, which gives me additional comfort that I'm with taking a short position here. And you can see we get down as low as, 60 or so. This is a slower moving ETF that tracks the Mag 7. We do get that move up. But then we're now getting so this would be the close here above the ATR ribbon, and then we get this new short here. So the way I would play this one, and the options on this one are not terrific, or are not really highly liquid. It's harder to play for me, but I'm still going to look at this on Monday, Tuesday, see if there's an opportunity here for a move to the downside, putting my stop loss at 65.74 or the top of that ribbon there. So this one is something that I will be keeping an eye on this week. So this is my watch list. Let's see if we can do the S&P 500, see if there's anything interesting in there. Okay, so pretty quick on the scan. See if we have any longs first of all. Nothing there. And let's see if we have any shorts. Okay, a few of them. Cintas, Goldman Sachs, we've talked about, M&T Bank, Airbnb. So the way I like to use my watch list, I'll have a quick scan down first and I'll see, okay, are these all clustered in the same sector? And in this case, the pain seems to be spreading across sectors here. We've talked about the financials, KeyCorp, M&T, Morgan Stanley, Goldman Sachs. Then we also have what is a little surprising to me, the consumer staples, the Jam Company, Procter and Gamble. Then we've got some of the industrials, Ingersoll Rand. What else do we have? Invesco is financial, Franklin Resources, financial, Cintas, more industrial. But a lot of these were names that had starring roles in the market over the last 6 months or so. This one, a little bit of support here at the ATR. So this one, I'm not as confirmed, excuse me, not as confident on. Airbnb we talked about. Let's look at KeyCorp. So KEY. Convinced, that was the word I was looking for. This one looks interesting, and I like this. Oh, this is good. So there's that previous pivot low. We broken below it and had a close below 1890. I think this could be something that I want to take a closer look at on Monday and Tuesday. My stop loss would be here at 2063, which is from $1.80, so about 5% away. I'm okay with that. And yeah, this might be best of breed here. So the screener has actually been quite useful to me to just be able to go through, instead of looking at 478 stocks, I can now just focus on the 10 or 15 that have some kind of signal here. Let's see if there are any re-entries. So re-entries generally are shorter term plays. So my option positioning is different than on the main longs and shorts. And there's nothing here, nothing on the re-entry side of things on the S&P 500. So I'm going to look at some of these financials. Oh, if you'd like, you can take a screenshot of this area here. If you have access to the scanner, you can certainly do that yourself. You can do it on any time frame. So let me just pull that up. So I'll make this a little smaller so that you can screenshot this if you'd like. So anything that has the 1, this is sort of a binary system. If it's either a 0 or a 1. 1 is something is active, 0 is it is not active. So just move my mouse away. Okay. Let's go back and talk about, of course, the big topic that has been dominating the headlines over the last little bit, which is crude oil. And we get this move up to, and it happened about exactly a week ago on the Sunday night, where we got to about 120 on crude futures. And we had that collapse the following day because news was, okay, this conflict is maybe coming close to a resolution. And then, of course, the news changes and we're not anywhere close to a resolution. And the Strait of Hormuz continues to cause supply issues. So, of course, the crude continues to run. And as I mentioned on Friday, I do regret not taking that USO call debit spread that I was looking at, which was deep in the money, where we had the 90 call, which had very little extrinsic value, and selling the 106 call against it, which had only extrinsic value. Our net cost on that trade, on that 16 wide spread, was about 10.50, call it 11 to be safe. And that 11 turned into 16 pretty quickly. It was an expiry that would have occurred 2 days ago. So I'm looking for more of those kind of short-term trades on the oil side, as the options premiums on anything oil related have really spiked. I closed this one out, or I closed out part of my position on NAT here, and I closed out the short position that I had that was established in here. So where are we? Sorry. It was on this bar here on the 2nd of March during the market chat. I had the $6 call on which I sold 50 shares short. So it was a 50 delta call, sold 50 shares short. And there's that dividend. So I had to pay out that dividend from my pocket because I held the shares short. So even after paying out the dividend, I'm in a net profit position on this trade and still holding a $6 strike on the call side for April of this year. So let's see if that trade now, if it turns around. If it does, this will be one of the better trades that I've had this year. So for crude, more upside, unless I see anything different. And this is not surprising that crude's moving up, equities are down. This has been the story of the last week. I think this is starting to accelerate as we get into options and quad witching this Friday. I think next week things will get a little bit more volatile. GLD. So my position on gold has not changed at all. I'm still in XGD, which tracks the miners. I love this support that we're finding at the ATR. Uh, I talked a little bit about this move through the support that's found at the ATR, and then we get a higher close. In this case, we move up, and we've been in a sideways pattern. The the way I had talked about it was on this BMO trade here. And you can see from here, we go up a little bit, but then we collapse. So remember I was saying if I were to take this trade here at 141 and change, I'd be out here at 139. So it'd be a small loss, and I can afford to take a lot of these small cuts because eventually I'm going to get a trade that looks like this, that I'll be able to roll my options with, use trailing stops with, et cetera, et cetera. One of the reasons I didn't get into Bank of Montreal, there were two. One was the options pricing, and one was because it is a Canadian listed stock. The look on that day between BMO on the TSX versus BMO on the NYSE was a little different, which, again, I've said this in the past that when you're looking at these cross-listed instruments, so that's there, keep this chart in mind. Okay, Monday, March 9th, that move up through the ATR. And Monday, March 9th, you see it's already in a bearish trend here. So when you're looking at some of these cross-listed issues like BMO, Royal, TD, etc., a lot of it is a bet on the currency exchange. And if I show you what the USD CAD did over the last week, you will see there's that violent action on the USD CAD, which accounts for a lot of the difference that we see on the charts of the two different issues, BMO on NYSE and BMO on TSX. So if you're trading any of these cross-listed issues, keep that in mind. And I talked a little bit about on Friday, I talked a little bit about using the implied volatility between the two markets on the options chains to perhaps create an arbitrage situation, but you've got to be prepared to know that, or you have to know, or you have to understand that when you're doing that, it's as much a wager on currency fluctuations as it is on the movement of the stock. Use If you're using Gemini, ChatGPT, etc., asking it or prompting it in the right way to ask these kind of questions will really broaden your knowledge on these things. And I found it to be very, very useful. SLV, having a hard time getting above this level here, thrashing. This is basically like a fish out of water. We go up, we come down, we go up, we come down. And for me, the key level is for right now is this $81 level on SLV. Silver futures, I don't think will look that much different. Yeah, it's a little smoother, but there's the level that I'm watching here. It's 95 on silver futures. So let's see where we go with this. It seems like a lot of the investments that were in silver futures may be rotating into oil right now. And let's see how long that holds. I still am bullish on silver. I've got my longer term plays, January expiries on my SLV calls. PSLV, I own the shares, and I think I have a September put option as my hedge on PSLV. So nothing, haven't made any changes to it in the last week or so. So holding on to those as well. Looking at good old Bitcoin. I know Ether had a good day on Friday. Bitcoin, uh, this was the wedge that we had drawn in. So just follow my cursor there. There's the top end. There's the bottom end. There's the wedge. We did break out. We tried to come back a little bit, and now that same wedge to me has turned into an upward channel. So this one here, you can see if we were to draw in our channel, even if you were to draw it in from here, you can see this is the area that I kind of expect us to stay in. A breakout above this area, I will be impressed, and it will get my attention, and I would consider starting to look at new long positions to this level here. This would be my target here. And once we get above here, I'll be a little bit more impressed, and I'll be looking at longer term long positions here. So for me, looking at Bitcoin, my bias is to the upside with a target at 74,700. I think we have covered everything. We've done the screener. We've looked at this. KeyBank is my most interesting setup for this week. Let's see how that plays out tomorrow. It is a short setup. And oil is the other one or oil is the other big name that I'm watching this week. Fed announcement on Wednesday, big options expiry and big quad witching on Friday. So volatility to be expected in the markets this week. And I'm making sure that I'm fully hedged or as, pardon me, as hedged as I would like to be. And when it comes to these kind of weeks, not that I'm expecting anything from the Fed, but I am expecting things from OPEX, and I'm expecting things from oil causing a bit of havoc in the market. So I want to be able to not be thinking about positions as I'm going to bed at night. Okay. US economic calendar, we have already mentioned this significant or insignificant rate decision here. I'd be very surprised if they actually end up cutting. I don't think there's any indication of that here. PPI as well could move the markets pre-market on Wednesday. Jobless claims as on Thursday, new home sales on Friday, excuse me, on Thursday as well. Friday, nothing scheduled. That is it for us. Again, a reminder, tomorrow's market chat comes to you at 10 a.m. Eastern, not 1 p.m. Eastern. We hope you can join us then. I'm going to send out the link for that. In the meantime, enjoy the rest of your weekend. We always wish you profitable trading and the very best of health. We'll see you then.